Hi, this is Jon May with Realty. Thank you all for logging into my webinar. It's Thursday evening, 7 o'clock. Looks like we got almost a full house. I'm going to try to get us out of here in 45 minutes, and there will be an opportunity for you guys to email me in some questions. I'll try to get to as many as I can. So let's dig in. Again, my name's Jon May with Realty right here in Hampton Roads, and I work with a very talented team of real estate professionals, and we specialize in foreclosed properties. A little background about how we got into this debacle with so many foreclosures. I don't know if you all remember the tech bubble at the early 2000s. I know that I would go home one evening saying to my wife, we're rich, and then another evening I'd be going home and saying, oh my gosh, we're poor. And the only thing that really helped me sleep at night with the ups and downs of that stock market and my retirement fund was my rental houses. At the time, I probably owned 6 rental houses, and they were, probably appreciating 3% annually, and that appreciation made me feel a whole lot better. In any event, when that big bubble burst, lots of people pulled their money out of the tech and started buying real estate. Also, the Federal Reserve attempted to avoid a recession by dropping interest rates really low, and that began the biggest real estate boom in U.S. history. Banks and lenders created very risky loans, and really, if you could fog a mirror, if you had a pulse, they were loaning you money. I was selling and sales managing at the time, and people were just knocking down our doors to buy homes, people that normally would not have qualified. There was lots of easy credit available, and lenders got sloppy. I think they got sloppy because they knew that their money was going to be backed by the U.S. government, so they would lend it away, and then with all of the demand for houses for both investors and for excuse me, I'm sorry, just turn my phone off, and for buyers, move-up buyers and first-time buyers getting into the market because they could, supply and demand pushed up prices pretty rapidly. These loans that were very risky loans were packaged. Wall Street folks got loans with that were very good quality loans of people that pay their bills, and they packaged them with very risky loans with people that have a tendency to not pay their bills, and then they would sell them to life insurance and other people around the world, and they were guaranteed. In 2007, reality sets in, and the real estate markets across the U.S. started to adjust sharply downward and enter the foreclosure crisis. Oops, again, my apologies about my phone. A little bit of the numbers. Nearly 2.5 million foreclosure filings last year. 2012, they're projected to rise to 3 million, and that's according to Realty Track. That's a good website for those that want to track foreclosures. Almost 7% of American people are homeowners or falling behind on their mortgages. 1 in 10 are delinquent or in some sort of a foreclosure. The number is up 72% from last year. Many project that the crisis will rise and peak in 2012. There's disturbing economic news everywhere. Banks, stocks, money market funds, bonds, and mutual funds are losing. I still feel that way in 2011. It's very volatile. Over 220 mortgage lenders went out of business. Unemployment, layoffs, and cutbacks also fuel daily news headlines, and all that adds to consumer confidence. When people don't feel good about the security in their job or the security of the economy, they stop spending. And when they stop spending, it can be a downward spiral for the economy. So we had the foreclosure explosion. Is it a crisis or an opportunity? You know, when I first started my real estate career, people thought I was nuts. I jumped in during the savings and loans scandal, and lots of savings and loans were going belly up, and the government formed something called the RTC, which was designed to liquidate properties. And being new in the business, I remember hearing a sales trainer saying that you can earn a living helping people buy and sell homes, but you create wealth by owning real estate. And I remember this gentleman said that for people in our industry, for every child you have, you should own a rental house. And that's what Denise and I, my wife, we started doing. We started buying rental houses when my children were just 2 and 3 years old. You know, jumping into buying rental homes can be kind of scary, but you know, you have to zig when everybody zags. So lots of people see it as a crisis. I see it as great opportunity. Meltdown realities. The U.S. foreclosure market is at an all-time high. I read an article recently saying that Fannie Mae and Freddie Mac are actually holding back some foreclosures because they don't want to flood the market. So they're going to try to trickle them out there. You have a once-in-a-lifetime opportunity to buy property at prices that were unthinkable only 1 year ago. It is a huge opportunity for investors. Best investment opportunity in over 30 years. You get to buy positive cash flow properties for a fraction of their original value. There's increased demand in rentals. Lots of people are losing their homes, and they need to move into apartments and rental houses. Now, what's unique about the market right now is that supply and demand for rental houses is driving up rents, and supply and demand, or the lack of supply, or I'm sorry, the lack of demand for homes is driving down the prices of homes. It is really an unusual event that you can go out and purchase and own a home for a whole lot less than you can rent. And fortunes are going to be made by those who take action and get out and buy. You know, I worked for a land developer for a number of years. Back in 2007, when things weren't going so well, I remember being in a partners meeting, and the owner of the company comes in, and while you would think he is distraught because our land values were plummeting, he wasn't. And he looked around and he said, "Ladies and gentlemen, we need to look for buying opportunities." And he was upbeat. This man was a very smart man, far smarter than me, but he recognized this as opportunity. It's also a huge opportunity for owner-occupieds, people that are going to buy a home and live in a home. Again, you can purchase homes at a fraction of the cost. You'll get instant equity, plus a bigger boost when the market does rebound. You're going to be able to afford a larger or a nicer home compared to 2 years ago during the market bubble. And you'll pay less on mortgage than rent. You know, in the past it has been that property values and interest rates were an inverse relationship. When properties prices are high, interest rates are low, and vice versa. When property prices are low, interest rates are high. But right now, it really is unprecedented that both house prices are low and interest rates are low. Again, this is the time to take massive action. I was fortunate enough to sell off a handful of my rental houses during the boom, during 2005, 6, and 7, and it's time for me to restock the shelves. And I lose sleep at night hoping that the market doesn't rebound until I get a chance to restock those shelves and buy a whole bunch of rental houses for myself. Quick note about retro boomers. People right now out there in their 20s to early 30s. Those folks, in my opinion, are going to be the generation to help pull us out of this recession. They are starting to come into their own buying power and earning power, and they're going to start buying up homes. And when they do, that I think is going to stimulate the economy and help pull us out of this recession. Oops. Now let's talk about what is a foreclosed property. Foreclosure occurs when an owner can't make his principal and interest payment on the mortgage or loan secured by the property. The bank takes the property back and hires a real estate agent to market and sell the property. So for today's webinar, we are focusing on the real estate transaction after the bank has already foreclosed and has taken ownership. That is called REO in our industry, or real estate owned. REO properties will be listed by real estate agents and sold. All right, let's quickly review some other types of real estate that are often confused with foreclosed homes: the pre-foreclosure or the short sale, and a courthouse auction. A pre-foreclosure or a short sale, that is when a lender, through negotiations, agrees to accept less than what is owed on the property to satisfy the loan. Here's a good example. I buy a house in the height of the market, 2006, and I paid $300,000 for it. I put little or no money down because I could, or I did one of those interest-only house payments because they were prevalent back at the time. And now I get transferred, or I lose my job and I have to sell. Well, the house value, again, I apologize. The house value has plummeted to $250,000, and I still owe $300 on it. But I got to move, so I can either stop making my payments and be foreclosed on, and the bank now has to take this loss, or I can approach the bank and say, I got to move. We consider a short sale. It saves the bank some money, and they realize that they're going to take a loss if they got to foreclose on it. But the banks simply are not motivated, and I go into that in a little bit more detail. Short sales, they're complicated and they're time consuming. We could spend the whole day doing a whole nother webinar on short sales. So what the public thinks, what is the perception of short sales? Short sales have become a buzzword in the market, desperate to hear something less discouraging than foreclosure. Buyers see the short sale list price and mistakenly believe that they can obtain the home for that price or less. Another perception is that buyers think banks should be thrilled to have the property sold and out of trouble. So buyers think short sales are a great deal. The reality is, only a small percentage of short sales close. The list price is not realistic. It's a price set to get buyers' attention, not necessarily a price that the bank will accept. Agents don't know what price the bank will accept. Let's get back to our example. I bought my house for $300. Property value has dropped to $250. I listed with a real estate agent. They're going to put it out there in the market for $230,000. Sounds like a huge value. A buyer comes along, signs it, writes a contract. Seller says sure, as long as the bank approves it, and they sign the contract. Then we got to send it over to the bank and find out what the bank's going to do. Well, the bank may or may not accept it, and quite frankly, they drag their feet getting a response to you. So it looks like a great price, but the bank might come back and say, hey, we'll take $270, and it might not be that deal that you think it is. So the bank doesn't have to respond on your timeline, and it typically takes 60 to 90 days to hear back from them. It simply doesn't make sense that a bank should be thrilled and answer quickly and sell a home cheaply. Again, they're going to drag their feet 60, 90 days, hoping that maybe another offer that is better than yours comes in. Banks are already facing a loss, so they're not eager to let somebody steal it when the next person may come in with a better offer. All right, a sheriff auction, or some people call them a courthouse sale. I have attended these courthouse sales. In a nutshell, after 90 days of non-payment, a notice of sale is published, setting an auction date within 45 days and detailing the amount owed on the house. Not all homes that fall into foreclosure go to public sale because owners have the right to make up back payments up to the point of auction. Some of the drawbacks of these auctions. In today's market, the price you pay at an auction is usually higher than market value based on the mortgage amount due. They put it at auction and the minimum bid is the payoff. Well, often the payoff is higher than what the property is worth. So don't let that fool you. Often these buyers must pay cash and have a cashier's check at the auction. These homes are sold as is with no warranties or no inspections. You also must be an expert title researcher, because if the person's not making their mortgage payment, many times they're not making the real estate tax payment, or they didn't pay the guy who built the deck on the house, and there's other liens on the home that you need to be aware of. At an auction, a bidding war could leave you out or force you to pay more than you should. There is no clear title and no title insurance. The one sheriff sale I went to recently, the home was still occupied by renters. Landlord stopped making his mortgage payment. Renters didn't know it, and whoever bought that house at that foreclosure, at that sheriff's auction, had to go and evict the renters. Property could be trashed by angry homeowners or even angry renters. There's lots of risk with loss of cash and your time and resources. So let's take a closer look at foreclosed homes, or REOs. Let's talk first about the perception of buying foreclosed homes. Lots of people feel that the home is a good deal just because it's been foreclosed on. That's not necessarily the case. A lot of buyers feel they will save money by purchasing a foreclosed home versus buying on the open market. Again, not always the case. Lots of people think all foreclosed homes need a lot of work. You know, there are some brand spanking new homes that were built by quality builders that could not make their payments, and they got foreclosed on. So I've sold some brand new homes that went into foreclosure. There's also the perception that anyone can make lots of money buying foreclosed homes. And there's also the perception that any real estate agent can help you buy and process foreclosed homes. Let's talk about the first perception. Bank foreclosed homes are all good deals. Foreclosed home, the bank takes ownership due to non-payment. Doesn't mean the home is a good deal. The bank's goal is to get the highest sales price possible in order to cover their mortgage. The list price could be more or less than market value. So you need knowledge in the particular market, and you must perform your market research to determine what the property is worth to you. As I mentioned, I work for a land developer, and when we'd go and buy a big piece of land, we would spend money doing our due diligence. We would do archaeological surveys, environmental surveys, and making sure that the municipality we were working with would agree to allow us to build what we need to build. And if those things didn't pan out, we simply didn't close. So you need to do your homework on foreclosed homes as well in the same way. Perception number 2, that buyers will save money by purchasing a foreclosed home. Well, there are many additional risks and potential expenses when you're purchasing a foreclosed home versus a owner-occupied MLS-listed home. Financing a foreclosed home can be costly and time-consuming, and many times can't be completed. There's also potential repair costs that are unknown many times and will usually require cash out of pocket to fix. There's also the perception that foreclosed homes need a lot of work. In the current market, approximately 5 to 10% of the foreclosures are in move-in condition, and that number is increasing. Some of the banks are now going back and spending some money to repaint and recarpet to try to get more than what they've been getting used to. 10 to 20% of the homes will need a little bit of work, carpeting, paint, that sort of thing, and 70 to 85% will need work. And repair costs are going to vary depending on the home itself. Perception number 4, anybody can make money or equity buying foreclosed homes. If you listen to the radio ads, internet ads, and everywhere else you turn, you believe foreclosures are easy money. Homes are just being given away. Not necessarily the case. A lot of times they're selling much closer to market value. If it were easy, everybody would be doing it. And the truth is that for the inexperienced, buying a foreclosure can be a difficult process if you try to go it alone. And perception number 5, any real estate agent can buy and process foreclosed transactions. Again, if it were that easy, every real estate agent would be listing and selling foreclosures. Most agents don't want to deal with foreclosures, which means few have experience. Often you're no better off than going it alone. Let's talk about the property. What makes a good foreclosed property? And how do we go about finding them? Well, the first thing we do is we locate homes in nice neighborhoods. Our litmus test is if I would not feel comfortable walking down the street during the day, let alone at night, I would not consider buying a home in that area. The next thing we do is we preview the homes to make sure the home fits the client's wants and needs. We don't simply send out a big list of foreclosed homes. There's hundreds of them out there right now in our marketplace. What we do is we preview them. We do market analysis on them, and then we crunch the numbers to see if they are in fact good values for investors or owner-occupants. We perform extensive market research to determine the value of the home. We also look at the big ticket items, roof, foundation, structure, to make sure that there are no major structural flaws. Only 1 out of 15 homes is a best buy. So if we find 3 best buy homes, that means we've gone out and we've previewed and have done due diligence work on about 45 homes. It is a time-consuming process. These best buy homes reflect the best values in the current market with low fix-up costs. How do we get the best deals? Well, there's a few tricks. We closely examine the mind of the bank. Try to figure out what the bank is thinking and what can we do to capitalize. How to get the best deal? Most banks won't even consider an offer in the first 7 days that the home's been on the market. You must know when to negotiate. There's a point when banks will start negotiating. There are critical points in the foreclosure timeline when banks will make price adjustments, and your agent must anticipate these points. Negotiating strategies. Good negotiating strategies can save you thousands of dollars and hours of time. How and when you submit your offer is critical to whether or not your offer is going to be accepted in the first place, to what price you get on the home, and the terms of the deal as well. The number 1 item the bank is considering when reviewing your offer is your ability to close. Everybody thinks it's the price, and that is not the case. So many of these homes go under contract, bank takes the house off the market, and they're losing money when they do that, and then the home does not close. The first thing they're going to look at is your ability as a buyer to close on the home. 32.4% of foreclosed home transactions fall apart before they close. Lenders are getting burned on non-closing agreements, and they're getting much more discriminating when accepting purchase agreements. Again, providing evidence of your financial ability to close is going to be the number 1 thing that the banks are looking for. Submitting the offer. Cash is king. If you got the cash in the bank, then banks are loving you. Cash deals are better than finance deals, again, because of the probability of getting them to close. And your home equity line of credit is not the same as cash. Financing deals are possible, but they must be structured properly. What and how to offer? Well, lowball offers will not get reviewed or considered by a bank. They're going to be basing their decision on a percentage of the list price. What banks do like to see is higher earnest money deposits, higher dollar earnest money deposits. The more money you're willing to put as an earnest money, the more confident the bank is going to feel that this transaction is going to close. And again, that's the number one thing they're looking for. There's far more risk to you of not closing with a higher earnest money deposit, and because you're assuming more risk, that bank is going to be a little bit more flexible. And banks will always counteroffer regardless of what your first offer is. What and how to offer? Well, if financing is required, you're going to need a strong pre-approval letter. A pre-approval letter is far different than a pre-qualification letter. A pre-qualification letter just means you talk to a lender over the phone, and based on what you told him and your income and your debt is, he seems to think that you should be able to afford the payment. A pre-approval letter is you've given them your 2 years taxes, they've pulled your credit, they have verified your income, they will loan you the money subject to an appraisal. Big difference. Are you working with a national lender or an internet lender that nobody's aware of? You need to be using a credible source of financing. Often people are finding lowball rates on the internet that seem terrific, but more often than not, when you go to close, it's not what you've expected, and you end up closing late. So are you using a solid local lender? And again, if you are financing the property, it takes longer to close. If you're a cash buyer, obviously you can close a whole lot quicker. Lenders, you need to be working with a lender that has experience financing bank foreclosures. Most foreclosure contracts are going to have a $100 per day penalty if the closing date is missed. So you need to make sure you're working with somebody that is going to hit that closing date. Property inspections. One of the nice things about REOs as opposed to the sheriff's sales is that you can have a home inspection. You can walk through the home while it's on the market. They're vacant. You can observe the home before making your offer. Buyer can perform a home inspection, so your contract can be subject to a home inspection. And but the timeline of the inspection is critical. Some pitfalls for the inexperienced REO buyer. Banks can be difficult and unresponsive. I recently bought a foreclosed condominium in, I guess about a year ago now, and I feel like I had to give blood in my firstborn male child to the bank to make this transaction happen, and that's just the nature of the beast right now. So you need to not take those things personally, and even though you have cash in the bank, if you're going to be getting a loan, the banks are going to require lots and lots of documentation right now. Contracts can be overwhelming. When I got in this business, our real estate contract was 2 pages, and if it was a foreclosure, it was a 1-page addendum. Contracts now are upwards to 60 pages, so they can be overwhelming. The bank gets to select the title company, even though you pay for title insurance. Title insurance is important, and it's something that a lot of people miss. The bank, when you buy this foreclosed home or any home, is going to require you to get title insurance. But the title insurance you purchase only protects the bank. We recommend that you get owner's title insurance to protect you as well. Especially so if any of those unforeseen liens show up, tax liens and mechanics liens that I was talking about earlier, all you need to do is send them right over to your insurance company, and they take care of it. Some of the pitfalls of the foreclosures is utilities may not be on for inspections, so it's the buyer's responsibility to get the utilities turned on, have your inspection done, and then turn them off. Cash will take precedence over a finance deal, and banks will not take contingent offers. So you can't say, I will buy that home subject to the sale of my home. They won't even look at it. You need you need to close on time, or you could be subject to a $100 per day fine. And if you default on your closing, you could lose your deposit. And sometimes the banks make a counteroffer of highest and best offer. So you say, all right, I found this house, I'm going to offer $150,000, and the bank says, oh, we're not going to take that offer, but we want you to make your highest and best offer. Well, basically they're asking you to negotiate with yourself, and their strategies to not do that. Okay, our real estate network and foreclosed properties. Again, we're a Hampton Roads group of real estate professionals, and we specialize in foreclosed properties. We do extensive market research to find the best priced homes for our clients. Our clients, who are both investors and owner-occupied, have purchased many foreclosed homes over the years before the foreclosure market was booming. So let's take a look at some examples I pulled up. This is over in Isle of Wight County, Eagle Harbor. Nice family neighborhood, highly amenitized, beautiful pools. This home's market value is $359,000. It sold in 2011 for $250,000. These buyers saved $109,000, and that's a good looking house. 4-bedroom, 2.5 bath. This one I thought would be a great example I pulled up for an investor. This is up in Williamsburg, and it's a little country-styled home. Its market value was $79,000. This house sold for $38,000. This investor got $41,000 in instant equity, and if you do that on a 7-year mortgage, the house payment's only $600 a month. So that home buyer could have that house paid off in 7 years. Here's one over in the Newport News. This was a foreclosure. It sold at $66,000 in January 2011. It was fixed up and then flipped in June of 2011 for $205,000. Not such a bad deal. And here's another example I put on. This is up in Governor's Land in Williamsburg, which is a beautiful high-end community. And I put it on here just to show that when people say foreclosed, they often think bad neighborhood, slumlord kind of thing, and that's not the case. There are foreclosures at all price points, in all marketplaces, and this, in my opinion, was a steal deal. The market value of this home in Governor's Land was $670,000, got foreclosed on. This one sold at $425,000, a $245,000 savings. So again, foreclosures is not necessarily for first-time homeowners or investors. It is for move-up buyers. It is for people looking for executive homes like that. All right, now would be your time to send in some questions, and when you do, please include your name and the area you are writing in from, and I will try to get to as many as I can later on. All right, quick review. What did we learn today? We learned that only a small percentage of short sales close. Bank is not motivated to sell a home in short sale, and they really don't require a timeline. So if you're looking at short sales, you put your offer in a month, 2 months, 3 months later, you find out your offer's been rejected. So you've lost all kinds of time and effort. And in many cases, if you're buying your first home, it's you're up at night wondering if your offer is going to be accepted. Sheriff auctions are risky. Again, bidding starts at what the mortgage is owed, and oftentimes that is higher than the property value. You're not allowed inspections, and you need to come up with cash. So purchasing foreclosed homes correctly results in lower purchase prices versus short sales or sheriff auctions. We also learned that not all foreclosures are good deals. Extensive market analysis needs to be completed to determine what the market value is, and a significant amount of time is required to find good homes. Knowing when to submit an offer will affect the price you pay, and how you submit the offer will determine if the offer is accepted. Banks can be difficult to work with. Potential risks for unknown repairs or no utility inspections. You want to make sure you're working with a national lender with experience in foreclosures, and that you could be subject to a $100 per day fine if you miss a closing date. And of course, you could lose your earnest money if you don't close. We also learned that foreclosure opportunities are everywhere. They're in all parts of Hampton Roads at all price points, but they must be purchased correctly. So you can see why a real estate agent specializing in foreclosed properties could easily be the #1 reason you will succeed or fail in buying foreclosed homes. Real estate agents must have experience in buying foreclosed homes, find the best deals in the local market, find the best quality homes, know when to make the offer, know how to make the offer, know how to negotiate and counter offers, and know how to handle home inspections. They must be able to time the purchase closing to avoid that $100 per day. A buyer must realize that the process of buying a foreclosed home is completely different from a traditional home purchase. Prior to last year, only a handful of real estate agents ever purchased a foreclosed home. Currently, there is a huge foreclosed home market, and some real estate agents are advertising the market. However, most of these agents have zero experience buying foreclosed homes. So would you let a foot surgeon perform a brain operation on you? You really need to work with somebody that specializes in that market. Our real estate network and foreclosed properties. We have engineered our foreclosure research process and market research around timing. The critical points on the timeline are crucial in REO negotiations. We're able to save our clients a great deal of time, frustration, and money. Most foreclosure lists are not built around the best timing for the buyers. You get sent on a wild goose chase with a big long list of 100 foreclosures to go look at. Our real estate network and foreclosed properties. You can probably tell that the foreclosure crisis presents enormous opportunities for those who take action. Here's a serious point for you to answer about investing in a foreclosed home today. If you do, are you going to be better off in a few years? Or if you don't, will you be kicking yourself for standing still today? If you're ready to take action and capitalize on this tremendous opportunity, then our team might be able to assist you. So if you're ready, and you should take the next step, and together we'll see if this is right for you. We have a simple and short process. Simply send me an email, jmay@ggrva.com. Include a note stating that you're ready to take the next step. Be sure to specifically include all of the information on the next page for our team's review. Need your name, your address, obviously a phone number, and answer the few questions for us. We need to know if you're interested in a primary residence or investment property, because it makes a difference on how we do our math for you. Need to know what sort of time frame that you're looking to purchase. Have you met with a lender? Are you pre-approved with the lender yet? Have you ever purchased a foreclosed home before? Have you owned a home any time in the last 3 years? And any other questions or comments that you might have. Once your information is received, you'll be contacted by a team member shortly. Our team member will consult with you to determine if this is right for you. If so, we will schedule a one-on-one consultation meeting with you. At the meeting, we will review your goals, your buying criteria, and your time frame, and we'll set personalized searches and tours focused on your buying criteria. And we'll help you get pre-approved with a quality mortgage lender. All right. Question from Susan of Virginia Beach. Do I need down payment money to buy foreclosures? That's a good question, Susan. And the answer is going to be it depends. If you are owner-occupied, there are some foreclosures out there, VA foreclosures as an example, that require no down payment to buy a VA foreclosed home. So in that answer, the answer is no. There are some counties that have rural loans. So even if it's not a foreclosed, if you are an owner occupied, there are loan programs out there that will help you buy foreclosed homes with no money down. Quick story. This goes back a few years. Found the house I wanted to buy. Did the math. The math made sense. I could buy it, and the rent would cover the mortgage and my expenses. And I was talking to my wife. I said, "Honey, we need to buy this home. I cannot make a no money deal. I need $3,000." And she said, "Nope, don't buy the house." And I'm like, "Honey, I only need $3,000. Let me buy this house. The math makes sense." And she said no. So I called a friend, and I called a buddy, and I said, "Hey, how would you like to own half a house for $3,000? And he said, "Well, what do you got in mind?" And I said, "Well, here's the deal. I found this house, great neighborhood. This is what it's going to rent for. This is what we can pay for it. This is how much, cash I'm going to need." But at the time, I was managing 4 homes. And I said, "I'm managing four rental houses. So here's the deal. You put up the $3,000, and if the hot water heater breaks, we split it. If it needs a new roof, down the road, we'll split it. But since I'm managing 4, I want you to manage this one. So, if there's any, you collect the rent, you pay the mortgage, and you take any kind of phone calls from the renter." And he said, "All right, that sounds like a good deal." And we bought that house, and we bought and held that one, and we owned it for over 10 years, and recently sold it at the height of the market, and we made some great money. For his return was thousands of times over his investment, and my return on my money, since I had no money into it, was infinity. No money into it for me, and I owned half a house and walked away with quite a bit of money. So if you're an investor and you're like, "Well, I have no money, how do I get involved?" Well, you can do what I did. Find the deal, put the deal together, bring in a partner. Half of a deal is better than no deal. You get tax benefits along the way. You get to control an appreciating asset, for somebody else's money. So food for thought. All right, another question. Chuck from Newport News. Saw your ad on Foreclosure Home Tour. Can you explain? Yeah, Chuck, on Saturdays at 10 o'clock during the week, I'll find 3 to 5 of the best values out there in a certain area, and for folks interested, we meet at one house and then we caravan house to house. It takes about 2 hours, and I put together a market analysis. So you get detailed information on the house. You get an idea of what that house market value is based on comparables. Oftentimes, I'll bring a home inspector along with me, or a lender to answer questions. And essentially, it's no obligation, no cost. It's free, and we just get a chance to look at 3 to 5 foreclosed homes on a Saturday morning. I've got a website if that's something you're interested in. You can go to www.freehr, stands for Hampton Roads, foreclosuretour.com. That's freehr foreclosuretour.com. So if it's something you're interested in, you go there and you can sign up. We pick a different area every Saturday. So sometimes it's Newport News, sometimes it's Chesapeake, sometimes it's Virginia Beach or Williamsburg. So that's where you can go to. Okay. Michael from Williamsburg. What about renters that don't pay, phone calls in the middle of the night, and general headaches of being a landlord? Mike, I can do an entire webinar on that. There are strategies. One thing I always did on my homes is I always kept a home warranty on mine, and I would give my renter the toll-free number. There's a $60 deduct, and I would have them responsible for the $60 deduct. So they'd have the toll-free number, the account number. If something broke, I'd have them call the warranty company direct. The warranty company had my information. I'd get an email that something was taken care of, but they're in the house It just seemed to be a whole lot more convenient for the renter, for myself, and it seemed to work for me. Right now, as a real estate agent, I did my own property management. So I would, run the ads and find the renters. As I mentioned, I'm in the process of restocking the shelves, and the margins are such that I'm hiring a property manager to manage my own properties, and I'm just focusing right now on finding the houses. Property management will charge anywhere from 8 to 10%. So you find something that rents for $1,000, they're taking $100 a month, but they're taking the phone calls, they're sending out the handyman, and it just frees up your time to enjoy with your family. So that's the strategy I've taken. There's also the strategy that a lot of investors take, and I'm a big advocate of this, and that is advertise your home for lease purchase. There's lots of people out there that would like to buy a home, but for one reason or another are not in a position to. So essentially they will rent it from you with the idea that they will be buying it from you. And what I've learned is when these people feel that they're going to be buying the house from you, ultimately being the homeowner, they take a whole lot better care of it. So there's lease options and lease purchase deals that you can put together for that that work well. So, Mike, I hope that answered. I think I'm out of time. In fact, I think I went a little over time, so I apologize. A few important notes. Please know that we can't guarantee that every applicant will be accepted as a client. You're going to want to register immediately because client spots are limited. And if you apply at a time when client openings are not available, we'll put you on a waiting list. So much of our business now is referral. When business is referred to us by our clients, we actually put them first on the waiting list. So if it's something you're interested in, let us know. Thank you. Enjoy your big profits, whether you are buying owner-occupied or rental. And right here, we're going to put up again a list of the things that we're looking for: first name, last name, your address, your phone number. Answer these questions. Shoot it on over to me at jmay@ggrva.com, and we'll get you started. Thanks for logging in, and please email me any of the other questions that you might have. Have a great night.